Hello everyone. Today I'm going to start with question. You have $3,000 to invest in stocks, and then you have two choice of stocks here. Number one is Amazon. Number two is Nomura Holdings. Amazon stock is one share. Price is $2,961, and then no dividend. Number two, Nomura Holdings. Stock price is $4.56, and then annual dividend is 18 cents. So which one do you choose? This is an article posted in Fidelity.com. The title is 9 Best Dividend Stocks to Buy Under $10. An original article was by Jeff Reeve, U.S. News and World Report, June 2nd. So before we see that article, we see the start from the SPY. SPY current yield percent is 1.78%, and SPYV means the value stocks 2.95%. SPYG means the growth stocks 1.08%. So we can this is the standard to compare to those 9 stocks recommended. Okay, so we'll see the 9 stocks one by one. The annual capital management yield percent is 15%. Ontario Midstream 24.2%. ASE Technology 2.4%, CenturyLink 10.5%, NL Chile 6.4%, KT Corp 3.8%, Nomura Holdings 3.4%, Pearson 3.4%, United Microelectronics 2.5%. When I see those recommendations, I don't want to see all those 9 best stocks. I want to see which one is the kind of more performing better. So here I draw the black line is SPY, and then the others is the 9 best stocks. This is about 1 year, and then so it's 1 year. The return SPY is 8.05%, and then the 3 of them is better than SPY, and then 6 of them is the underperformed than SPY. So I want to mainly see those outperform stocks. Now we see the 3 outperform stocks with the SPY, and then I add two more SPYG, which is growth, SPYV, which is the value stocks. So the SPYV is the minus 4.77%, and then SPY again 8.05%, and then this one is the ASX. That one is 8.77%, and then here SPYG 18.74%, and then UMC, that's 26.85%. The highest one is NMR, which is Nomura Holdings, 32.56%. So the so far those two is looking better than others. Those chart, hard to see the colors, and then the numbers are small, so I summarize put it on here. So SPY, the yield percentage 1.78%, and 1 year return is 8.05%. And then the SPYV, which is the value stocks, minus 4 3.77% one-year return, and dividend is 2.95%. SPYG, the growth stocks in S&P 500, the dividend yield is 1.08%, and the one-year return is 18.74%. So these numbers is the data from the today. So it's the here the 9 best stocks. We choose 3 of them, and then I put the data from today, because the previous one, it was the old data from the June 2nd. So when you see the today date, ASE Technology one-year return is 8.71%, and then the dividend yield 3.45%, and Nomura Holdings one-year return is 32.56%, and dividend percentage of 4.01%. United Microelectronics, the one-year return 26.85%, and then yield percent is 8.39%. So and then before we go to next page, we should remember this: when Fed interest rate is close to 0%, return of investment. When you think about return of investment, growth stocks are a little bit better than value stocks. As we see here, SPYV and SPYG. So it's the growth stocks making more earnings returns than the value stocks. Now we see those 3 best stocks individually. ASE Technology, that company is a Taiwan-based technology company that provides a range of semiconductor service. So they pay dividends once a year, and then the dividend payday is in August. So it's a good time to buy these stocks, and then you got the dividend, and then you can keep it or you can sell. So then you're gonna have your dividend gain like 3.5%. So you realize your gain. So it's very safe, right? So today the one share price is $4.62, and then dividend amount per share is 0.1595 cent or dollars. I'm sorry, the 15 cent or 16 cent. So and the 1 year growth rate about the dividend, so more than 2.5%, a little bit more than that. So the second thing is the Nomura Holdings. The one stock price is $4.56, and then dividend is around 18 cents per share, and dividend rate is 4.01%. 5-year dividend growth is 3.43%. So Nomura Holdings is based on Tokyo financial firm, and then they pay dividends twice a year, which is in March and September. So the one is United Microelectronics. This one is the semiconductor wafer foundry, and then they pay dividends once a year. So stock price is $2.74 per share, and dividends is 23 cents, and dividend rate 8.39%. 5-year dividend growth 9.95%. Let's try answer the question we started. So here the one Amazon stock price is $2,961.97. So this year Amazon stock 1 year return is 48.69%. So compared to the Nomura Holdings, so stock price is $4.56, and the 1-year return is here 32.56%, and then the uh, dividend yield 4.01%. So the exactly same amount of money here, you can buy 649 NMR shares, and then using that shares, you can buy, you can have dividends a year, $118.70. So in the case you have this money, which is the confirmed your capital gain, and so when you calculate from the 32% and 4% together, you can expect 36% return annually. So it's a 1-year return. So it's a little bit less than the Amazon.com, but when you see here, the black line is Amazon, and then the blue line is Nomura. So at that time, Nomura was performing a lot better than Amazon. So which means today Amazon performing better, but like here, right, better than the Nomura here. But we don't know when is maybe Amazon going down again like this and Nomura going up like that. Then in the case with the dividends, Nomura be better, right? So depending on the period you're trading or investing, so or which one do you prefer, like without dividends growing only, or with the dividends growing? So that's up to you. That's all about today. Thank you. Love once more. Thank you twice.